If you've been thinking about buying a house and been sitting on the sidelines, you're probably getting inundated with a ton of data, whether it's from the news, maybe your real estate agent, or maybe your favorite loan officer keeps throwing numbers out to you. But what do they all mean? Zillow just released their latest housing market report. I'm going to share some interesting statistics. I'm going to give you my spin on the report, and then you can decide for yourself if now's the right time to buy, or what can you do today to get yourself ready to purchase in 2023? Let's just start with the headlines. You can see here, home price plateau continued in October, while rising interest rates chilled sales in October of 2022. Just with that headline alone, home price plateaued continued in October. But there's so much talk that the market's crashing and things are literally falling apart when this title alone tells you that we're hitting this plateau. When I hear that, I'm thinking more of a correction. And this word and term has been used quite often by many real estate agents across social media. Many people don't believe that we're going to see this massive crash, yet we will see somewhat of a price correction because of the last couple of years and how crazy the real estate market was because interest rates were in the 2s and 3s. Now, to see the market plateauing, or to use that type of terminology, to me, that's not a bad thing. And I think as a home buyer, when you see that type of information, like I mentioned before, you get what you look for. If you're looking for doom and gloom, this article is not going to give you doom and gloom. However, in my opinion, in this article, just with the headline alone, they're saying that things are just cooling off. But remember, this market report is done in October, which means going into the fourth quarter of any calendar year, the real estate market tends to slow down anyway because we are coming up on Thanksgiving. You've got Christmas and New Year's. So unless you're really motivated to sell your house, you're probably thinking of selling in the new year simply because you don't want to move and have to pack up your home, or you just don't want a bunch of strangers trampling through your house during the holidays, which is totally understandable. And that's why most sellers, unless you really have to sell, maybe because you're relocating, maybe getting divorced, or something else is coming about where you have to close by the end of the year, you might be putting your plans on hold. But as a buyer, you know that you have all the leverage in this market right now because sellers are willing to negotiate, and because interest rates jumped up so quickly from the summertime, many buyers got scared. So there's less buyers actively looking for properties today, which again, as a buyer, you have all the leverage because you are serious going into this time of the year, which typically you can probably get a better deal if you waited until the spring, when everyone decides to sell and everyone wants to come back into the marketplace in order to start buying. The next thing I want to point out in this article, which stood out to me, was the language that they use as far as home declines. So they said Las Vegas and Austin saw the sharpest home value declines. And Las Vegas saw a decline of negative 2.3%. And Austin had negative 2.2%. But you see that verbiage there had the sharpest home decline. To me, they're trying to hype that up and make it seem a lot worse than what it is. But remember, a 2% reduction is barely anything. In the Las Vegas market, you're probably talking $8,000, if that. And honestly, I'm sure any seller would reduce their price $8,000 to sell. We've had so many of our clients partner with our great realtor partners that have been negotiating to get their closing costs covered. We've had clients that literally got tens of thousands of dollars that was covered by the seller to purchase their home. One of our last clients bought $1 million house, and the agent was able to negotiate a $55,000 credit for that buyer to purchase their home. So these types of things are happening every single day. But the media and social media, they're not going to hype that up so much because they want to sell you the negative news to keep you on the sidelines. And if you've been watching my channel, I've been talking about these hedge funds that have been loading up billions of dollars in order to purchase property. And they're coming after the houses that both you and I would normally go after and purchase ourselves. So it's making it that much more difficult for the average Joe to become a homeowner in today's market. And let alone going forward in the future, it's not going to get any easier. And another key point I want to mention here is that they said many sellers are waiting out the market cool down, at least evidenced by the flow of new for sale listings hitting the market, now down 23.9% from last year's flow. Again, the key part in that whole sentence is that they're making the comparison against last year's numbers, which of course, anything that went up on the market sold in a day or two and had 50 offers on. So you have to take that in context because most of these reports that a lot of these real estate publications are making and these headlines that we're seeing, all these numbers and these statistics are based off of last year. You had record low inventory, you had record low interest rates, and you had record high demand. Anything coming off of that of course you're going to have a massive swing and it's going to just look horrible, because who didn't want to buy a house at 2.5%? And for all of you that own real estate and sold your house over asking because buyers were willing to pay $50,000, $100,000 more than what your house was worth, and then what did you do? You in turn took those profits and you did the same thing on the next house. It was a horrible cycle that we were all going through for the entire year. But now that rates have jumped up, things are starting to level off a little bit. So again, take that with a grain of salt and the timing of this article, because we are going into the holiday season, which again, things tend to slow down. Now, when we look at some of these charts that Zillow had put together, they have their home value index, and they made a comparison from October of last year to October of this year. And I thought this is kind of interesting because most of the markets that you see here still have had appreciation despite interest rates rising. Now, we started to see interest rates rise around July. So seeing that these numbers are still where they're at, to me, shows that we're still in a strong market. You have the top 4 markets on this chart, all in Florida. Miami, Florida with 23%, Tampa, Florida with 21%, Orlando, Florida with 19%, and Jacksonville with 17%. All hot markets. So again, when you look at some of this data, you also have to take into account that real estate is also very local. So if you are thinking of relocating to another part of the country, you have to look at that state's data or that city's data. And I know that might sound obvious, but I've talked to many of you that are relocating. And a lot of times the comments that I'm hearing are based on national statistics or based on national numbers. You have to drill down on what's actually going on in that city, going on in that neighborhood, because you might live in Miami and you might say, man, home prices are just going up. They're not slowing down. But what if you're looking to move to, call it Boston, Massachusetts, and you can see here, they're up only 6.9%. That's not a huge amount from last year compared to your 20+% over in Florida. This is why you want to make sure you connect with a real estate agent locally in that market as soon as possible, so you can start to get engaged of what the market is like. That way you can start to make the best decisions and start coming up with a game plan to make sure that you are doing the right thing. And if you're a first-time home buyer and you don't know where to start, but you are going to be moving, you can hit the description below. There's a link to my first-time home buyers guide that will literally walk you through the entire process from start to finish, and you will feel so much more comfortable about buying your first house. And you can always set up a call with me and my team, and I'd be happy to walk you through a customized plan that we can design for you, whether you're thinking of buying 6 months out or even if you're a year out from buying your first home. Now, here's another great statistic. You can see the for sale inventory has been starting to decrease. Again, we're going into the fourth quarter of the year where things traditionally start to decrease. And you can see that from 2019, 2020, and 2021. It's almost like we're on the same trajectory as 2021 at this point. And I would imagine in the next couple of months, when we look at this report again, things will probably start to decrease again. But again, this isn't surprising. This is something that happens cyclically every single year. So to me, no surprise looking at these numbers. And now we're looking at some of the new listings report. You can see from July of 2022, things really started to decrease. Why? Interest rates jumped up. We went from 3% to 7% literally overnight. So if you were a seller, you probably panicked. You probably didn't want to sell your house, and buyers literally took a break. I remember that entire month, not only me, but my branch and even some of my other colleagues at other companies, we were all checking in on each other like, what the heck is going on? Because rates jumped up so fast, none of us were really predicting that that was going to happen. We knew rates were going to increase over time, but we didn't know we're going to come in the next day and rates were going to be what they were. So you can see, evidently, not a lot of homes were on the market for sale, but as they start to decrease over time, again, we're going into the holiday months. I would only imagine that these numbers are going to continue to go down based on what we've seen over the last several years. Again, nothing to panic about, but as a buyer, here's the thing to remember. There's not as many homes on the market. So even though technically it's a seller's market, when you want to look at the months of supply of inventory that's out there, it is still a buyer's market in the sense that you have way more negotiating power than what you did in the last couple of years. And if you weren't paying attention to the real estate market in the last couple of years, the biggest drawback that we had was that you had to pay your own closing costs. And let's just say you're buying a $400,000 house, that could probably run you $8,000 to $10,000. So if you were buying a house last year, you had to have enough cash to come in above the asking price of the home, which in most cases, you're probably thinking 10, 20 plus $1,000, maybe even more. And then you had to pay all of your own closing costs. So if you were a home buyer in the last couple of years, you had to have your own down payment. You had to have the cash to be willing to go above the sales price of the house, and you had to have your own closing costs. In today's market, you don't have to worry about overbidding a property, so you save money there, and the sellers are willing to pay your closing costs, so you can eliminate that as well. So really, the one thing that you need to focus on going into the market right now as a buyer is your down payment. That's literally it. And remember, the biggest myth that's out there is you have to have a 20% down payment. That's totally false. If you're looking to buy a home that you're going to live in, you can put as little as 3 to 5% down. FHA financing, you can put as little as 3.5% down. And for all of you veterans that are out there, you can put nothing down to buy a house. And remember, don't let anybody talk you out of utilizing your VA eligibility to buy a house. I literally just got off a call with a client who's moved here from Texas, and they want to use their VA eligibility. She had mentioned to me that she only wanted to look at new builds. And I asked her what was the reason behind that. And she said that she's heard when you're a veteran and you want to try to go and buy a resale property, that process is a lot more difficult. And the reason behind that, she had said that that's what was told to her by her other friends and family. And she's even read that online. Now, remember, for all of you veterans that are out there, you've earned the right to utilize your VA loan. Do not let social media, a realtor, a lender tell you otherwise. This is a great program. You meet all the guidelines. The guideline in the program states you can put no money down and you can buy a house. You could have $100,000 in the bank. You could have $1,000 in the bank. You still meet the requirement in order to purchase a home. So if you can qualify utilizing that, you can use that towards a new build or a resale home. That's not going to change it whatsoever. Your realtor and your lender should be in your corner, and they should be fighting for you to help you get into your house, not trying to persuade you to use any other sort of financing to make their jobs easier. That's total BS, and don't let them take advantage of you. Looking at the data that Zillow provided us, I don't think the market's as bad as everyone makes it out to be. Things are plateauing, which is a good sign because that means that things are leveling out and they're not necessarily crashing. And all the data looks to be the same over the last several years because we are in that time of year where things tend to slow down. So if you're a seller, now might be the time to start thinking about what do you need to do to get your house ready if you plan to sell in the first quarter of 2023. And if you're a buyer, now might be the time to start talking to a loan officer to figure out what can you qualify for. Because if you have other bills or other things that you need to take care of, you have several months to do that before we head into the new year. And if buying a house is at the top of your priority list, you have to be a little more disciplined as we go into the holiday. Don't overspend. Keep your bills low. Keep your debt on your credit cards low, because these are the strategies that will help catapult you into becoming a homeowner into the next year and make your life so much easier. And again, if you don't know where to start, check out my description. There's an entire guide for all of you first-time home buyers that you can check out. And if you want to see this report yourself, I'll drop this in the description below. Thanks so much for watching, and I'll see you on the next one.